If I give you an opportunity to privately invest in this asset, $27,000, every year I give you $4,400 back. And then that asset has good potential, right? Would you take the investments?
Today, I have invited my friend Ivan to join the podcast. This is the first time Ivan came up onto my show. So I knew Ivan through another group of friends. In that group setting, we have some, investing, sharing, and so on. So there's this presentation given by Ivan. I think it's very interesting. So that's why I invited him to the show so that more people can benefit from his presentation. Just a very brief introduction of Ivan. He's actually a full-time investor. Based on what I understand is he never even started work full-time. And straight away jump into full-time investor. So there's a lot of story that maybe we can also lead you to another interview that Ivan has done with another channel before. Yeah, that's the brief introduction. Welcome to the show, Ivan.
Hey, thanks, Boon. Yeah, so basically, as what you said, I've been doing this investing full-time for I think maybe 15 years. Yeah, so I started off trading more derivatives than stocks. And then with the profits, it has to go somewhere that is more safer as compared to derivative. You trade derivative, one day you can win a lot, the other day you can go bankrupt. Yeah, so I had to find a place where, you can put your money, invest it at a reasonable return safely. So hence I decided to go into investing full-time. And I think, as you may know, I mainly do small caps, small and micro caps. Yeah, those that are not well covered by institutions because in those areas, then I think I have no competitive edge. So mainly I look into small micro caps and so that's the main story from derivatives being a big part, stocks being a very small part, mainly speculative. Now to derivatives being a much smaller part. I still play a bit here and there, but then the investing becomes a major portion. Yeah.
The transitions takes how long from you started out doing derivative? It's more like trading, more like speculations, and now really towards like investing. I won't say. I'm also curious to know how long is your horizon when it comes to investing? Yeah.
Okay. So the transition, I mean, it's quite smooth, I would say, because initially there were a lot of opportunities in derivatives trading, so I put in a lot more time. Yeah, I mean, there was a Hong Kong arbitrage opportunity between, IG markets and the warrants, structured warrants in SGX. Yeah, so I started then, there was a lot of opportunity there. So I maybe 90% of the time I was there. And then 10% of the time, whatever profits I had over the month, then I would think of which stocks should I buy. Yeah, but then because I spent so much time on derivatives, so I didn't have much time to do research and all that. So the investing part was just play only, start out, try, but it wasn't very successful, or rather, there were a few bumps here and there, so. But over time, the more lessons you learn from the investing part, then I found it more interesting. Now, derivative is also quite harmful for health. You keep trading, your heartbeat goes up, you start to sweat a bit. So investing more healthy, right? Because it's more stable, you do more research. So as I start to learn more about investing, then I realized, actually, this is quite a much better place to learn and much more beneficial as compared to doing derivative trading. Yeah, so gradually, as I learn more about stocks and how to properly invest, then I realized that I need to put in more time to research in order to achieve a better return. Yeah, so then derivative also over time, I realized that, firstly, I don't want to take so much risk. Secondly, also due to market circumstances, the opportunity has diminished, put it that way. Yeah, not totally zero, but diminished. So yeah, stocks is always there, investing is always there, so I have more time to do that. So that's the transition part. Yeah.
I see. So just curious, is it difficult to be a full-time investor? Because I believe that your way of investing is not just flip through some PDF, looking at annual reports, and then you do buy, sell already. It's not that. You are much more active compared to, I would say, average retail investor. So for example, you really go and attend AGM, meet the management, go site visit and so on. Maybe you can share a little bit on your experience as a full-time investor on this area, how you do research and so on.
Sure. Okay, so first and foremost, right, I mean, the first thing to be becoming a full-time investor, you must have at least a six-figure investable asset. If you don't have a six-figure investable asset, I think it's very difficult to say you have 50K and then you want to earn 50K every year. It's like almost impossible kind of thing. So to be reasonable, if you don't have at least a 6-figure investable asset, don't even think about, investing full time. But then once you are there, you start, then you must look at the kind of returns that you need to be able to sustain your lifestyle. If you find that the returns that you need is like 60-70%, again, it's a bit challenging because then you need to take on very high risk. But if I'm talking about 20%, 10-20%, I think over time, as you acquire skills and knowledge, you will be able to do it. But it's not like instant. It's also a bit like insurance advisor, Actually, just now you mentioned I never worked my whole life, right? Actually, not true. When I was 21, I worked as a financial advisor.
Okay.
But that was like a self-employed kind of thing. So I never really worked under a company. But then as a financial advisor, self-employed, so we went there. Again, when you start out as insurance, your income also very low. So I consider it similar to full-time investing. It takes time to acquire the skills, acquire the clients for the financial advisor part. But for the stock investing part is to acquire the skill set needed to be able to identify and, profitable ideas, put it that way. Okay. Yeah. So, everybody's learning curve is different. It takes a different amount of time for people. But then, generally, I think, if you put in sufficient effort and you're humble enough not to be overly aggressive, your risk profile, risk management and all that, I think earning a decent return, a double-digit return is okay. I don't know, I saw from where that somebody mentioned Warren Buffett, if he can buy into small micro caps, then he will be able to earn a 50% return every year easily or something like that. I don't know.
I think he mentioned something like this, but I don't remember exactly what's the quote. I think the point is to say that he can't generate, say, for example, like 30% every year, a high number, is because he's limited to only very large cap, because two small companies, he can't too much money, so can't really deploy into small cap. But whether how high is the percentage, or whether it is every year, or is it like average out could earn, let's say 30% or any number, right? That one, the details I don't remember.
Sure. Yeah, something like that. Yeah. So similarly for what I feel, based on my lifestyle, I don't need that much. So I think I have sufficient investable assets that I think can generate at least a decent double-digit return every year. Then I think that's fine for me to sustain my lifestyle. So hence I go into full-time investing.
I see. You make it sound like very easy to get a double digits. I just got a double digit returns last year, but it's not positive, it's negative. so that's the situations of investing in like larger caps. Just follow the beta of the markets and so on.
Sure.
Okay. Yeah, I think last week because you did a sharing on this company called Keck, right? And then you also mentioned about like you actually want to do this sharing because you traveled to Macau to do I'll call it considered site visit, right? Yeah. So maybe share with us before we go into the company. Share with us like your experience of going there. Why do you plan to go there? Is it like this is like 100% investing due diligence trip, or you kind of mix it with your own travel and so on? Just share a little bit of fun stories there. Yeah.
Okay. Yeah, actually, okay. So due D is actually very important. Actually, it gives me a lot of insights. Actually, over the course of over the years, right, I have a lot of companies I invest to. If possible, I will go to the site to visit if there is a site to visit. If not, then maybe I visit management, whether is it in China, in KL or whatever. Often it helps me to gain a lot of insights. So this trip for Keck, right, to Macau was to see the residential properties that they developed. But then actually, I also gained a lot of insights, which I can elaborate later. For Keck, it wasn't just Macau. Last 2 months ago in December, I went to Vietnam. They have a hotel in Ho Chi Minh, so I just stay at a hotel. And some people will think like, hey, what's the point of staying at a hotel? Like, does it really, you can see anything, man? You can see the profits and all that, man. Actually, there are things that you can identify. So, for example, I talk about the Ho Chi Minh trip. There actually Sheraton Saigon being the hotel that they own is the biggest contributor to earnings for Keck, right? So when I went there, you can talk to the staff there to ask about how's the occupancy rate? What is it compared to pre-pandemic? And then things like that. So they tell you, actually previously most of their clients were Chinese and Korean. Now only left Korean. But because of the booming Vietnamese economy, so now you have a lot of people from different countries coming in for business. not so much leisure anymore. Like the Chinese tourists, mainly they were for leisure. I mean, of course, there were some business components as well. But because in the past few years, we got a trade war between US and China, right? Then a lot of factories have to move to Vietnam. And then Vietnam economic growth was also very strong. So they thought about, they actually have a much more diversified client base, customer base in terms of the hotel. And then of course inside the hotel there was a casino. And then when I went to the casino, I was stunned because it's the only casino that I've seen that don't have cards. How can a casino don't have poker cards on? What casino is it? But actually it's all digital. So like even the slot machines is digital. The table, the baccarat table, blackjack table, all digital. So everything is on the screen. So you place your bet also, you like touch screen like that, you touch $50, $10, $20. You touch really, then the cards is shown on the screen itself, not even on, So a lot of it is digital. So it's quite amazing. So it gives me an idea that actually then this casino are not based on chance anymore. Some casinos like Genting, right? They will tell you, this year the earnings drop a bit because we lost a bit more. The games of chance, the outcomes weren't so favorable. Actually, we look at this kind of digital casino, right? There's no games of chance. Everything can be pre-programmed. Your win rate, loss rate, for your slot machines and for all that. In fact, I realized that for the slot machines is pre-programmed particular win rate. The government mandate that the win rate cannot be that means for every $1 million that Sheraton Saigon win from the slot machine, they have to return 900K as winnings. So it's like, but then, I mean, some people think it's bad, but actually, no, it's like a confirmed guaranteed profit. No matter, won't be like some funny thing happen, then you lose money, So it's a good thing. So so that these were some insights. Then, of course, you can look at the VIP area and how many people are back and all that. So very interesting. Then you can make a few friends there. And then if you need to know anything, then it's easy.
Interesting, because usually, for those established places like Macau or in US, when you want to make any changes, people will complain, right? Wait, I want to play cards, then suddenly you take away the cards, cannot. But when you have places like Vietnam, which is like new, so people tend to be like okay with news. They can try different new stuff, right? And sometimes all these new things is more like beneficial for the operator. Right, they can steal the win rates, all these things behind the scene that we don't know, right? But it's good for the business, so quite interesting.
And the other thing is that people, because it's a hotel, right? People don't go there to gamble. People go there to stay. The gambling is like I got nothing to do at night, then just go and play. So they are prepared, I bring in $200, never mind, prepared to lose these $200. So people don't mind, they just want to play. They don't care whether is it, digital or not. It's not like those Macau casino, people really go there and gamble. Then this time for the Macau trip, I mean, just now I didn't mention, for the Macau trip, right, what impressed me was not just the residential. I mean, I got some information by talking to the residents, but what truly impressed me was the environment, the surroundings. I mean, later you got time, can show some photos.
Yes, sure. Okay. I think let's move into the stock right way. So just for those who are watching, right, actually, Ivan, when he did this site visit, it's not just one company. There are like I don't know, like 5 or 6 companies, right? But out of so many, I think we will just pick one because we don't want to stuff too many things, and then we touch each of these companies just on the surface. We try to go choose one and then go deep. And then let's say if you guys watching, you guys are interested, leave the comment down below. Like say you want to hear more from Ivan, I'll try to get him on the channel again. But let's move into these companies that you want to share today. You want to do the screen sharing?
Yeah, sure. Okay, let me share my screen. Okay, so you can see what's on my screen, right?
Yes. I'll put myself on mute.
Okay, no problem. So basically, this company, I mean, just in case you all get the wrong Keck Seng, there are 2 Keck Sengs, one listed in Malaysia, one listed in Hong Kong. So this company that I'm talking about is the one listed in Hong Kong, 0184 Hong Kong, Keck Seng Investments, Hong Kong Limited. The Malaysia one is very different. The Malaysia one is palm oil and some property investments. I mean, they share the same ownership, but very different in terms of corporate governance, dividends, and business actually. So I'll just focus on Keck Seng Investments, Hong Kong. Okay, just to be clear. So I'll just start off by showing some key assets. Okay, there are basically Keck Seng has a lot of assets. Keck Seng Investment has a lot of assets. But I'll just show the key assets that are important to the investing thesis. So first one, Sheraton Saigon Hotel. This is the hotel in Ho Chi Minh that I mentioned. This one is the biggest contributor to earnings. But yet, asset-wise, it looks very small. Later, I'll just show you. It's very interesting. So so they have some hotels in Japan, China. Okay, all these are very small, so we ignore Canada. Okay, we ignore them for the time being. Okay, then the two bigger contributors, Sofitel New York, W San Fran. Okay, these two hotels are located in US. One in New York, one in San Fran. Very prime location. You can go and use Google Map and Google for this. In fact, Sheraton Saigon also. Sheraton Saigon, Sofitel New York, W San Fran. You can Google Map it. It's prime of the prime lah. And then the last one, the third most important segment would be the Macau. The Macau segment where is Ocean Gardens is like a residential project, but it's like 15 blocks. Yeah, so a lot of them is already sold. They have retained a few blocks that are kept in their balance sheet, mainly as service residence, and then some of it is office, some is shopping mall. So like the Ocean Club, and this is like the office building. Then the shopping mall. Okay, this is the Plaza Oceano shopping mall. So just to recap, three main segments. The Vietnam is mainly Sheraton Saigon. The second one would be the US hotels, the two hotels, the Sofitel New York and W San Fran. Third segment will be Macau properties. Macau properties will include their residential, their office, the shopping mall, but the residential will be the most significant part. Okay, so I will just move into the why I think the company is very attractive at current share price. I mean, if it's not, then no point talking about it, right? So now the market cap, just keep in mind, the market cap for Keck Seng Investments right now is 918 million. Okay, 920 million. Okay, let's just leave it there first. And then, okay, so let's go into the first major segment, which is the Vietnam hotel, Sheraton Saigon. Okay, we look at pre-pandemic. Obviously we are now, why I'm interested in Keck Seng in the first place is because it's a reopening play. Yeah, and then some people think reopening play talk very long already. It's probably factored into the share price. Well, I can say that Keck Seng share price indeed from the low has appreciated maybe about 40% from the low. But if you look at pre-pandemic comparisons, prior to pandemic, like in January, February 2020, it was like $4.60. So compared to now, there's still a very good upside. And it's not just this is like just a bit plain, simple comparison. Usually cannot compare like that, but I will justify why I think this $4-5 share price is still very reasonable. Okay, and it can be easily achieved. So we talk about pre-pandemic earnings for Vietnam, for Sheraton Saigon. If you look at 2019, okay, 2019 for Vietnam, this is after-tax profit. So after-tax profit, just ignore everything else, okay? I'll slowly explain the other things. So for Vietnam, it contributed 190 million in 2019. In 2018, it contributed 210 million Hong Kong dollars contribution to profit, okay? Now, this was based on, okay, I need to clarify, the ownership is, the equity interest is not 100%. So the profit sharing is 55-45. So 55% goes to Keck Seng, 45% goes to the local government in Vietnam, because actually this Sheraton Saigon is co-owned by Keck Seng and the local government. That's why they can open a casino within the hotel itself. Okay, so 55% ownership by Keck Seng. Actually, the equity interest is 64%, but profit sharing is 55%. Let's just use the 55%, okay, for simplicity's sake. So out of 192 million, 55% profit will be about 100 million, attributable to Keck Seng shareholders. Yeah, similar to 2018. Okay, now in 2019, when they achieved that, 2019 and 2018, when they achieved that 200 million Hong Kong dollar profit, okay, overall, the room rate was US $188, and with occupancy rate of 64.4% in 2019, room rate of $169 in 2018, the occupancy rate was 70%. Now, this is the kind of room rate occupancy. You look at, now you easily, you go and Google Sheraton Saigon. Okay, you Google Sheraton Saigon, you click on check availability. And then below, you click on, you change to USD, change the currency to USD. Okay, so these are the cheapest rates. Okay, the rates fluctuate because of occupancy. You know, the higher the occupancy, the more expensive it is. So like crazy. Okay, in February 2020, in February 22nd, like on Wednesday, it costs you 2,500 per USD to book a room in Ho Chi Minh. By the way, that's the presidential suite because all their normal rooms are taken up. But that's just an anomaly, just show for fun only. So if not, then the typical room rate is at least north of $200. If you can see, you know, like some days is super, you know, high occupancy is like 400. This is US or dollar already. I already changed to the currency US dollar. Then only on weekends. Now weekends is lower. Why? Because now mainly still business corporate traveler. So mainly they go there for business travel. So it's from Monday to Thursdays. Friday, Saturday, Sunday, you see the rates tapering down already. But still, the lowest is 188, 190. Okay, if you go to April, May and all that, you don't even see anything, lower than 180 minimal. And that's on weekends. So now you look at pre-pandemic, just now we said, average room rate, 188, 169. They're already making 200 million and occupancy is not that high, 70%, 64.4%. Based on the site visit, I can tell you that the occupancy now is definitely higher than than 64 or 70%, definitely higher. The room rate is significantly higher. Now everything is 200 plus. In fact, on weekdays, the average, you can see the cheapest room is like, 250, 290 US dollar. So I don't think it's that far-fetched to say, okay, based on my conservative estimates, we just say that we will just be, in 2023, the hotel will just be able to achieve the same as pre-pandemic. So 200 million Hong Kong dollar profit. I don't think it's very unreasonable. 55% sharing. So that attributable to Keck investments will be 110 million. Okay, just keep in mind this 110 million number profit attributable just based on the Sheraton Saigon alone. So then, so this is Sheraton Saigon. The other thing I want to add is that I think some of you may not have known, even though China has so-called open up, it actually has not fully opened up to Vietnam yet. The group tours are still not allowed to go into Vietnam. Individual travelers, you want to go into Vietnam, you still have to apply for visa. Okay, so essentially, right, the rates that you look at, you see here, why weekend rates are so low? There's very little tourists, by the way, because the number of rooms is huge, it's almost 500 rooms. So they cannot fill up the rooms from tourists alone on weekends. But wait till China fully opens when they start to, allow outbound group travel. By the way, one of their top destinations for Chinese, other than Thailand, Malaysia, Singapore, is actually Vietnam also. It contributed pre-pandemic, Ho Chi Minh, 30% of the hotel tourists, 30% of the people booking the hotel actually come from China. Okay, so watch out for this space. I think going forward, the weekend rates won't be 100 plus. It will go up when China fully reopens. So that's Vietnam, the base case, 110 million net profit for Keck alone based on their 55% profit sharing. Okay, so next one, I will go into their Macau properties. Macau, look at this Macau segment. Okay, actually Macau pre-pandemic, okay, they operate, remember I mentioned they operate service residence in Macau. So pre-pandemic, they have 100 million contribution, 90 million. This is 2018, 2019. Even 2022, okay, we go back to first half 2022, the contribution from Macau property service residence net profit after tax is 33 million for half year, 6 months ended June 2022. Now, this is like already very jialat time already, like in 2022, COVID was still terrible. In China, still zero COVID policy. So if their service residents still can generate 33 million in half year, so full year 60 million, I think not difficult, right? And going forward, given that Macau has opened up, all the China people are now rushing to Macau. By the way, I also went to Macau in the latest trip. It's super crowded everywhere. The hotel rates are super high. Okay, and then I don't know if you saw that, in order to extend the gaming concessions of the Macau casinos, they were required to put in a lot of money, throw in a lot of money to increase the Macau tourism attractiveness, non-gaming part of it as well, make it more family friendly and all that. So going forward, Macau GDP would definitely improve a lot. The recovery is on. more people will be coming to work also because of all the projects going on. So I don't think that, they will go below 60 million annual profit given the circumstances. Yeah, so 60 million will be a base already. In fact, pre-pandemic, it's all like 100 million, 90 million. So, but for conservative sake, I'll just take 60 million. And by the way, the Macau is not fully owned again. It's 70% owned by Keck. So 60 million, 70% attributable to Keck. That will be 42 million. Okay, so just now, 110 million from Vietnam segment, 42 million from, let's say 40 million from the Macau segment. Total 150 million Hong Kong dollars just from these two assets alone. Okay, the company has 340 million shares outstanding. Okay, so from these two segments alone, after tax, is already 44 cents a share. Now think about it. If I give you an opportunity to privately invest in this asset, okay, for, I don't know, $27,000, and then every year I give you $4,400 back, and then that asset is actually has good potential, right? Macau has good potential, Vietnam hotel has good potential. Would you take the investments? For sure, I would lah. I mean, I don't know about you. For sure, personally, I would. Okay, at the share price of 270, if you give me 44 cents of earnings every year, I'm more than happy. Then we think about stocks. Okay lah, 5 times PE stock everywhere also can find. 6, 7 times PE stock everywhere also can find, right? So what's the thing? Now, whether is it shareholder friendly? What kind of dividends do they give? Okay. Later I'll touch on to the other segments, but let's say just these two segments alone. We look at Keck Seng's dividend history, okay? Since 2006, that is 16 years ago, okay? So 2006, they paid 13 cents dividend, interim 3 cents, final 10 cents. 2007, interim 5 cents, final 12 cents. Okay, so 13 cents, 17 cents in 2008, 20 cents in 2009, 20 cents in 2010. Bear in mind, 2009, 2008, 09 was a GFC, so they still paid 17 cents, 20 cents, 20 cents. 2011, wow, okay, maybe a bit, the effects coming already, 12.5 cents. After that, resume back 20 cents, 18 cents, 15 cents, 15 cents, 50 cents, all the way up to 2019. Okay, why 2019 cut, even though it's pre-pandemic? Later I tell you, because when they announced the result, it's already pandemic already, Pandemic in China is like start in December 2019. So when they announced the full year result in March 2020, they were scared. Pandemic just start, how to pay a big dividend. So I cannot pay a big dividend already. So 2019, you see a dividend cut. But what am I trying to say? Prior to pandemic, from 2006 right until 2018, every year dividend is north of 12 cents, between 12 cents to 17 cents. Now, share price of $2.70. Actually, when I started buying this stock, it was like between $2.50 to $2. Like it dropped all the way to 180, 190, I'll still buying. Now, the dividend yield, even I use 250, okay, you pay out 12 cents, 12.5 cents is 5% dividend yield already. Now, if it's a consistent 5% dividend yield from 2006 all the way to 2019, and now it's post-pandemic already, things are recovering. Is it very unreasonable to assume that the dividends will come back to 12.5 cents at least? I think it's not unreasonable. It's not unreasonable. So I'm happy with that. Okay, so this is the base case. Now let's go on to the bonuses. Okay, what are the bonuses that can potentially bring this stock higher in terms of EPS, in terms of dividends and all that? Okay, so we come to the bonuses. So we talk about US. US is a bit of a drag. Okay, why the share price is so bad? Because US labor costs very high. They're all union type of, you cannot just say hire cheap labor to work at your hotel if it's pandemic, business is bad. Cannot. So unfortunately, the US hotel, the cost wise is very high. So to break even, just even break even for US hotel is not so easy. So okay, let's just take a look at half year 2022. Okay, half year 2022, they were still making losses of 24 million. Okay, and then also they had an income tax credit of 18 million. So I would say if you reverse back, the income tax credit is 42 million loss compared to depreciation 40 million, just break even only on a EBITDA basis. Okay, I mean, finance cost 12 million. I say conservatively just break even on EBITDA basis. Okay, but look at the half year occupancy rate. So half year occupancy rate for W San Fran was 68%. Average room rate US $300. For Sofitel New York, 50%. Average room rate $340. So this is kind of like their EBITDA break even numbers. You need this to break even. Now you see Sheraton 40% occupancy average room rate $125, they already can make 40 million Hong Kong dollar profit already. But then because US hotel, like I said, labor cost higher, everything is higher. So the break-even cost is higher, the occupancy rate is break-even is higher. So 68 and 50% room rate $300 plus. Okay, bear in mind, so we use the same thing. We do the same thing again. So you go Sofitel New York, right? Actually, Sofitel New York not so exciting. Later I show you W San Fran, even more exciting. So, okay, look at their room rates. By the way, in US hotels, January, February is the weakest, the lowest of the lowest. Okay, usually because it's their winter, nobody is traveling there. US hotel, if you look at most of, I would say 70% of profits come from September to December. Okay, January, February is the weakest. So now, you look at Sofitel New York. Okay, even the weakest months, February, the cheapest room is $200 plus, 270, 250, 290. Okay, March also same, not so good. The cheap, by the way, anyway, this is the cheapest room. Okay, if as bookings come in, the room rates will get more expensive. Now, the exciting thing is you go to April, May, you look at the cheapest room now, 334. I think cannot find any cheaper already. This is the cheapest room in April 1st. Okay, April Fool, so they give it cheaper. After that, all more expensive already. May, only this day is 367 or 395. After that, everything is start from 4 already. Okay, June, July, okay, again, July, August is a bit of a slightly a low season because everybody's summer holiday. Okay, so very little business travel. So come back to 300 plus again. But again, 400, even come back to 300 plus, the cheapest room is $330. Okay, August, September, then here's where the rate starts surging. So you see like this kind of day means it's fully booked one. So you see the peak season, September, October, all 600, 500, 600, 700. This is the kind of rates that we're looking at. Sofitel New York. Remember just now we say their Sofitel New York, right? Room rate 340, 50% occupancy only. When you see these kind of numbers, cannot be 50% occupancy. Okay, it has to be 80, 90% occupancy. If not, they won't price until like that. No, because nobody will buy. Only those desperate will buy. Okay, so it has to be a very high occupancy. So I'm very sure that in 2023, this number will be higher. This number will likely be higher for Sofitel New York. Okay, so let's go to W San Fran. You can repeat the same exercise. Actually, W San Fran, no need to show, but actually I want to show because it's more exciting. W San Fran, the fun part is that it's located next to a convention center. It's called Moscone Convention Center. Okay, Moscone or Moscone, Moscone. Just Google it. It's within a 1 minute walk from there, just across the road only. It's the biggest convention center in San Francisco. Whenever there is a convention, it means the room is going to be the hotel nearby all fully taken. So you see the room rate fluctuate like stock market like that, very high, mainly because whether got convention or no convention. Okay, so like certain days you have 200 plus. Okay, this month, February, is still very quiet. From March onwards, you see got 600 plus, 700, 400 plus. Then after that, quiet, become 200 plus. This is cheapest room. You go to March 21st, 22nd, fully occupied, cause got convention. Really, you go and check the Moscone convention calendar. This day sure got event one. Whichever day got event means the number is very high one. So you go to April and May, right? It's like, you see, you have numbers like 1,000, 2,000, the cheapest room. And then you have days 200 plus. But you get the drift. If you look at the numbers in general, right? Just now we talked about first half 2022, average room rate 300. Okay, if you look at this and you tell me the average room rate is 300, I'll laugh at you. Okay, seriously. So just go and then you go to June, July, you look at the numbers, it's all north of 400. Okay, some days very low, 230, 240, but you get the idea. Even you have 240 plus 430 day, is average is 300 plus already. So, and then we don't say all those super high ones. Yeah, and then of course we go to the peak season. Wow, September, you see all the thousands start appearing already. All the thousands start appearing already. So what I'm trying to say is that now again, San Francisco, you China citizen go US still need visa, still very long waiting time because the embassy is swamped with application. Some people passport haven't renewed yet, very long already expired. You know, like Singapore also want to go JB last time also passport expired, haven't renewed. So as all these things settle, imagine the China crowd is different from Singapore. Singapore population, Singapore citizen at most 4 million. China, I don't know how many 100 millions. So you can imagine all these people trying to renew their passport, go to US, go to Vietnam. So this is a reopening play lah. So for US segment, is still making losses in first half 2022, right? For 2023, I say my projection is break even. Not difficult, right? I suppose given the improvement in room rate, improvement in occupancy rate, I only predict break even, nothing. Okay. Whatever that they earn is bonus. So I don't think it's unreasonable. Okay, looking at the matrix as of now, as of first half 2022, which is last year, first half January to June, which is the weakest 6 months. In fact, the next 6 months should be more exciting. Second half 2022. So look out for the full year results somewhere in late March for Keck investment. But by then, I think people will be positively surprised already. Actually, US hotel is not that much of a drag. So I assume 2023 US segment break even. Okay, the China one very small only. So China one, they only own 42%. So even this loss, you go to attributable to Keck only $4 million. So don't bother. Japan, actually, again, a very small part. In fact, Japan now is booming. You get to look at the room rate, is crazy. Okay, but all these bonus, we don't bother lah. So we just talk about the three segments that I talk about, Macau, Vietnam, and US. Okay, US, 0. Okay, Macau, contribute 40 million. Vietnam contribute 110 million, total 150 million. So hence, this earnings per share going forward, sustainable in the next 10 years, I think is very sustainable. And with economic growth in Ho Chi Minh and inflation, in fact, why I like hotel plays, okay, inflation, no problem. You can always raise rates. It's a daily rate thing. Yeah, if inflation subside, interest rate drop, even better. Real estate play also very good. Interest rate drop to 1%, your hotel yield got 4-5%, also very happy. Right, so hotels are, for me, in my opinion, are the best reopening inflation hedging tool, put it that way. Okay, so I especially like Keck, but then a lot of hotels have re-rated. You look at the REITs, Ichigo REIT, all the Japan REITs. You look at all Shangri-La, even all those hotels, Banyan Tree. A lot of it either have inherent problems, either they are gearing very high or whatnot. But Keck is very clean. Okay, I show you the balance sheet. Okay, as of half year 2022, cash deposits and cash 1.24 B. Okay, we talk about bank loan, current 300 million, non-current 1.1, so total 1.4. Okay, 1.2 B of cash versus 1.4 B of debt. Very little only, not very excessive, right? I mean, trade and other payable, a lot of it is advanced deposits and rents, but even you consider this, I mean, for a real estate hotel play, a 1.2 B cash versus 1.4 or maybe 1.7 B liabilities, net liability is only 400-500 million Hong Kong dollar against asset base of net asset of 3 billion, close to 3 billion. And this is grossly undervalued. Okay, I'll tell you why this is grossly undervalued. Okay, as of June 2022, okay, the Vietnam segment asset, total asset 400 million. Total liability, 150 million. Okay, so, sorry, did I miss the, okay. Total asset, 400 million, total liability, 150 million. So what's the equity of Vietnam? 250 million. Just now, remember what was the annual earnings? 100 million. For a hotel that earn 100 million every year, contribute to Keck. The asset only 250 million. This 250 million is haven't count minority interest. We count attributable to Keck, only maybe about 200 million. So 200 million in the books contribute 100 million of profits. So do you think this figure is undervalued? I definitely think so lah. Okay, and then they have a lot of gaming machines and all that, the casino profits, and all that. So this is a very solid asset lah. So I will argue, okay, if Vietnam hotel can earn 100 million a year, if you ask me, would I pay 900 million to buy that hotel? I would, if I have 900 million. I would. And that's exactly the market cap of Keck Seng right now. So right now, the market cap of Keck Seng is equal to, I would say, the value of Sheraton Saigon. In fact, even Sheraton Saigon should be worth more. I would pay 900 million to own the hotel in Sheraton Saigon for sure. Okay, even a 55% stake. So then we talk about all the rest. Then don't forget they got cash, and then just now the net debt very small only ma. Then the hotel, you look at the hotel in US, what is the biggest segment asset, no? But yet, just now, I only predict that it will earn zero, contribute zero net profit to Keck Seng going forward. Okay, and then if you Google a bit about Keck Seng, the Keck Seng bosses, actually they are also co-found the Shangri-La Group. So these people, they actually know the hotel business very well. It's not like they are newbies. They will operate a hotel at a loss for the foreseeable future. I think they are fantastic business people. Yeah, and then the Macau property, again, Macau is super undervalued. Why I say that? Even though segment asset is 1.9 B, I show you, they actually revalue some, but they keep some at cost. So I show you this thing called property held for sale, 278 million. Yeah, I show you what is property held for sale. Okay, property is classified as property held for sale. All these residential assets, okay, all these what Begonia Court, Rose Court, okay, but all these left 3 unit, 4 unit because they sell left a few unit. The ones are the service residents these two. Bamboo Court got 40 units. Astor Court got 40 units. Total land area for the total gross floor area for these two is 200 plus thousand. Okay, if you add up Lily Court, Sakura Court, everything all these court, add together is about 400,000 square feet. Okay, 400,000. Keep this in mind. 400,000 square feet. Yeah, I put in my calculator first. 400,000 square feet. The selling price of all these, because some of them sold already, so now got second-hand resale market, and then got some, So you go and Google Ocean Garden. Okay, the project is called Ocean Garden. So this Elm Court sold already. Now Keck Seng don't have already. Elm Court, they want to list is 1,600 square feet. Actually, I also don't know, is it this figure or this figure? Is it 1,001 or 1,006? But heck, never mind, we use 1,006. I suspect it's 1,001. But anyway, the list price is 10 billion Hong Kong dollar. So if you take 10 billion Hong Kong dollar, even you divide by 1,006 square feet, it's still about 6,000 plus PSF Hong Kong dollar, 6,000 plus. If you take this one, then it's more it's 9,000. But anyway, when I visited the property, right, I look at the second property, the PSF price now for the resale is typically 7,000-8,000. Okay, for the projects there. But Keck Seng, the 2 blocks that Keck Seng keep, they are very smart. All these, what Begonia Court, Orchard Court, all these are poorer locations. Okay, they don't have sea view, or partial sea view. Bamboo Court, Astor Court, all these got super 100% sea view unblocked. Will never build something in front. Later I'll explain why you got time. So the idea is all these 400,000 square feet. If you talk about PSF, just now I said 7,000-8,000 right market rate. Never mind. Let's say financial crisis drop 30-40%. Okay, we go to $5,000 PSF. It's $2 billion worth of residential assets. Just now, what was the number there again? It's 278 million. Okay. 2 billion and 278 million. Because property held for sale, they put it at cost. And when did they build this thing? 1994, 1995. So this is 1994, 1995 numbers. This is not 2022 numbers. Okay. So, but some is revalued. If it's investment property, it's revalued. Like the office and all that, shopping mall, they revalue it because it's investment property. But all these residential ones, service residents, they keep it as properties held for sale. They put it at this number. Now, just now I say service residents, right? Why we don't see the service residents? The service residents is properties held for sale. Why is it so? Okay. Service residents is not something that they officially say. But then when I spoke to the residents in Macau, they told me that they purposely keep these 2 blocks, Bamboo Court and Astor Court, okay, to use as service residents. I suspect it's got to do with in Macau, it's not so easy to redevelop unless you get very high approval. So you see in Macau and Hong Kong, you have a lot of residential property that is 30, 40, 50, 60-year-old even, but people don't want to move on. You have really don't want to move. So you give them, throw them money, they also don't want because some quite old already. So I suspect, right, if you start selling, then next time you want to redevelop also very difficult. So now, firstly, I think there is good capital appreciation potential in Macau, mainly because of, the Gangzhou Ao Da Qiao, the Hong Kong Macau Bridge just built, and then next to Macau there's Hengqin and all that. I can show you some photos later just to illustrate Macau itself, but I don't want to talk too much about it because later Boon say it become a Macau thesis rather than a Seng thesis.
I think it's okay.
Yeah.
Can go into details as well.
Can go into details.
I think that one also form because now you are talking about this part. I think it's quite important to know. Because we are not staying in Macau. I don't think that many people also go to Macau that regular, right? So maybe you can share a bit on the photos and the type of properties now. Yeah, thanks.
Okay, can, no problem. Okay, so 群众要求 Bunti say then I will. Okay, so let's go to so we go to Google Map. So let's say we go to Bamboo Court. So this is Bamboo Court. Esther Court is here Esther Court. Just now they actually Google Map made me walk so long. Okay, wait Okay, let's say walk only like that. So this is Bamboo Court, this is Esther Court, these two Then all this is all the Shinja Court don't know what court, whatever, Sakura Court is here. So you see, just like I told you, those that they sell is all these buildings. All this Shinja Court, here Elm Court, don't know what court. On top also have Apricot Court, Peony Court. So all these behind one also already. Okay, what is left is Bamboo Court, Esther Court, Sakura Court. Bamboo Court leave the most, Esther Court also never touch. Lily Court also still have. Lily Court is just on top only. Lily Court I think is this one. So they keep these three. Sui one. Okay, why they keep these three? I illustrate to you. So Macau is these two parts. Okay, this top part and this bottom part. Okay, Macau is these two parts. And then Macau has very limited land, so they need to reclaim land. Previously, 10 years ago, don't have this area called Kotai. Okay, 10 years ago, Kotai is non-existent. Okay, now it's like super new and developed. The newest place in Macau. You go to Macau, people ask you go Kotai and see the casinos. The biggest, newest, nicest, grandest casino now all in Kotai. Okay, last time all the casino are here, all the city, this is the main area So your Wynn, Macau, your MGM, last time is here. Now still have, but the newer version, the nicer version now come here already. Come to this area called Kotai, is reclaimed. So again, the Macau government, land not enough, they will reclaim a bit of land here. But the other courts will be affected. But Lily Court, Esther Court, Bamboo Court not affected because their view is here. Their view is not here, not this reclaimed area. Their view is this area. Okay, so this area doesn't affect them. In fact, this is called Hengqin. This area is Hengqin. Okay, it's China. Hengqin is going to be developed. You could Google or Baidu Hengqin development. It's going to be a very major area of development, but let's forget about it for the time being. Okay, so we say this is Zhuhai, right? So then also they built the Gangzhou Ao Da Qiao to link up Zhuhai and then Hong Kong, right? See this super long Hong Kong Macau bridge that has been completed, I think 2019, Gangzhou Ao Da Qiao. So now, if imagine you want to stay in Macau right now, okay, where would you want to stay? This is the old city, this is the new city. And then I show you the master plan. So this is the master plan for Macau. Okay, yellow is commune. This is Portuguese, I think. 宜居社区 so for people to stay. So then the purple one is tourism. Okay, you can see 旅游娱乐. So tourismo, don't know what Spanish or Portuguese. Okay, so imagine so in the whole of Macau, residential do you want to stay here, or here? If you ask me, I want to stay here. Why? Because this is the old city. Actually, still got a lot of casino, tourism all here. This is the new area. Okay, you want to have connectivity to both. If you just stay here only, then you miss out on the new city. If you stay here, very far from the old city center, So this is an ideal place. And not only that, you have very nice sea view. Here, you jam pack inside already. And then this brown one is industrial although it's modern industrial, but you don't really want to be here And then so in fact, Keck Seng's property is like here, this where my hand is. It's like for me, it's ideal already. And this was what the property agent mentioned also And then unlike Singapore property, we say 99 year freehold how many years left for the residential? The Macau property already 30 years old. How many years left? Actually, I can tell you 10 years left. You say, 10 years left, jialat already. But I tell you, for Macau, it's like that. Okay, maximum renewal 30 years, actually the initial lease only 25 years. Time's up already, renew for 10 years. How much you need to pay? Well, if you own a property there, you need to pay 3,000 Hong Kong dollars to renew for 10 years. 10 years. 3,000 Hong Kong dollars to renew for 10 years. And forever is like that. So in Macau, it's actually freehold. But then they just want you to pay a little bit to, they don't say freehold lah, they say short-term lease. So actually 10 years, every 10 years you pay 3,000 Hong Kong dollars. Okay, then you renew by 10 years. It's the same for the casinos as well. That's why you imagine the casino, they spend so much money and then after they tell you, sorry, time's up, you need to return the land. No way. Okay, the whole Hong Kong, the whole Macau will riot. So similar to, China, certain parts, the residential, time's up already, but no issue. Just pay a very small nominal fee, you can renew. Okay, so this is the leasehold title with regards to Macau. So this is where Keck Seng's properties are. Then I show you a few more pictures, very interesting. Well, they recently built an LRT, other than the Gangzhou Ao Daqiao, right? They recently built an LRT right at the doorstep of Ocean Garden. In fact, the LRT station is named after the condo project, Haiyang Huayuan. This is exactly Keck Seng's property's name, Haiyang Huayuan. Okay, so this is the LRT exit. Straight away go down, this is Keck Seng property already. And then this is the overview. Okay, so from you stand at the bridge, you see there, this is the whole Ocean Gardens. Okay, so there are a lot of buildings. All these look very old one. All these are the ones that have been sold already. Okay, this one look very new. Later I have a close-up picture. Is the bamboo court and Esther color. So it's differentiated from the rest. Yeah, and then so yeah, I show you. So this is the bamboo court. Yeah, so Keck Seng Group confirmed owned by Keck Seng. So this is bamboo court, 40 units, and then this side 40 units Esther court. Yeah. So again, what do I benefit from going there? From Google Map, I wouldn't know the state of the properties, but you go there, you can see a big difference. Those have been sold and those that Keck Seng keep. The maintenance and then the look of it, the everything. So if this thing is 7,000-8,000 PSF, I don't think it's difficult for this to get 7,000-8,000 PSF. But again, just now I never input 7,000-8,000 into my calculator. I only input 5,000, really become $2 billion already based on that 400,000 square feet. Okay, so this sorry, what did I just do? Okay. So then I show you a few more pictures. Well, it's a very nice view from Ocean Gardens. If you stand at a taller area, this is like the view. That side is more sea view lah. This side still got some buildings across the sea. And then just now the LRT exit. Okay, so interestingly, you see even their medical facility also called Haiyang Huayuan Weisheng Zhongxin. I had to stop to ask a resident what is Weisheng Zhongxin. Okay, like in Singapore we always say Weisheng, like I don't know Weisheng Mian and all that is good. It doesn't sound very correct . So anyway, the Weisheng Zhongxin is actually a medical facility. They have specialist clinics for kids, for cough, for adults, for pediatric clinics, adult clinics. Because of COVID, they have vaccination center, they have COVID center and all that, isolation centers. So this is a full-fledged medical facility, and it's primarily to service people from Ocean Gardens. There are 15 blocks that I told you about. Yeah, so fantastic, So they have actually the planning is very good. They have a very good facilities. This is just next door. And then their supermarket, you don't see the shop front like very small. You go inside, see it belongs to it. It's very big. It's like your Sheng Siong supermarket. You can buy whatever you want inside there. Okay, so not only that, so they have a supermarket, they have medical facilities, they have cafe, restaurants. They have even sell ID interior design stuff. They sell you your floor tiles. If you buy a unit, you want to change the floor tile, sell you curtains and all that lah. And then Macau. Just to give an idea of the development in Macau, this is not, this was taken at the overhead bridge in front of Keck Seng. This is not the LRT exit. This is just a normal overhead bridge. A normal overhead bridge got lift, got escalator, got staircase. Singapore don't have. Singapore, some only staircase only. So this just show you, okay, really Macau is doing very well. You go to all the toilets there, right? Or even normal shop toilet not the restaurant, not hotel, not casino. Normal shop toilet also automated soap dispenser, automated tap. So very good. I find because the government got a lot of money So and going forward, can you imagine the gaming revenues now? China wealth is growing. So I can imagine more people will go into Macau to gamble. I mean, granted, some people want to go Singapore IR, some people go Las Vegas, but still Macau will capture a big part of the Southeast Asia gaming segment. And then also with the promises by the gaming companies to diversify into non-gaming, more family-friendly, all that I consider bonus. But then, so the point, the thesis is just to come back to Keck Seng, right? Based on the property price there, 7,000 PSF is equivalent to Singapore about 1,000, which buys you something like 1,002, which buys you like a 99-year in Pasir Ris. Something like that. Now 99-year new launch Pasir Ris also 1,003, 1,004 PSF already. So you can imagine it is not excessive. I think I mean, you give all those rich Chinamen, think they can easily buy the land property there and then just stay there when they go there and gamble for a few days. Or if not, even you say the building is old, just the land alone, I think Macau land, given the strategic location, given the casinos, given the history, the Portuguese history, I don't think there is a lot of downside for Macau property. Just now, 5,000 PSF already factor in almost 60% or 50% decline from peak levels already. Yeah, so I think it's pretty safe. That 2B or valuation can be it is reasonable. This 278 million is actually 2B. So if you again the market cap is only 900 million. So if you revalue this by 1.8B, you are revaluing it by twice the market cap already. So all in all, you see the equity number here that is 2.8B, right? Considering that the Vietnam segment only contribute 100 plus 200 million, and then the Macau one is still got another 2B revaluation surplus. I can say this number can easily be 5B. Easily. Okay, if it's 5B, then we are talking about a price to book of 0.2. So you have a price to book of 0.2. You have just now 270 share price, 44 cents earnings per share, 6 times PE. Dividend yield 5% minimum, 12.5 cent dividends. And then we talk about the prospects. I think there is very good prospects. Even when they really say, right, there is properties held for sale, right? But they postponed because they were building Gangzhou Ao Daqiao, they were building the LRT and all that. They think got, the Keck Seng themselves think got capital appreciation potential. So 30 years already, they still don't want to sell. I mean, granted, they have sold like 13 blocks already. Now left 2 blocks. The Astor Court, Bamboo Court, they really want to keep this for more capital appreciation, which I think is reasonable. So, and time has proven them right in the past 30 years. So going forward in the next 30 years, even if it just maintains at current value, I think then Keck Seng has a very huge margin of safety. So yeah, with all that in mind, previously when Keck Seng was $2, $2.30, $2.40, $2.50, in fact now $2.70, I still think it's a screaming buy. But what are the risks? The risk is COVID coming back, and then everybody go into lockdown again. But then you will buy manufacturing company, you buy whatever company, most likely go into lockdown, also all die. So Keck Seng, in fact, lockdown, okay. Now Vietnam still got domestic tourism, even first half 2022 still can generate. Okay, you see, first half 2022, most economies were still in lockdown. Okay, US resumed back a bit and all that, right? Keck Seng still can squeeze out, first half 2022, still can squeeze out a break-even number. Don't say 7 million profit, you say break-even number. So that shows the resilience of the assets. I mean, considering the upside, downside asymmetry, I think risk-reward, I think this is very good risk-reward dynamics for me at current share price. Yeah. So I think basically I've covered most of it. Canada, Japan, China, we say bonus. Yeah. So that's about it.
Yep.
Yeah. Any questions? Yeah.
Yes, of course, I have questions. Actually, I'm curious, right? Because I think I asked you before about like this looks like a risk play, right? But after listening to your presentation, I felt that if talking about like let's say exposures, right? This one is basically you exposed to tourism and then you exposed to residential properties and so on. But other maybe like larger cap REITs and so on, their price already went up to reflect the reopening. But it's just because these are small cap, hence it's very hard for monies to chase this. People see that market cap so small, I don't touch it. That's why it's still like so-called inefficient, right? Do you agree with such assessment? Yeah,
I show you the market depth of Keck Seng right now. It's like that. So, I mean, okay, if you are a retail investor, okay, you want to buy, let's say you buy 30 lots, $2.70 is 80K Hong Kong dollar. So that's like 10, 15K Sing dollar. I mean, 12, 13, 14K Sing dollar. Retail, okay. I mean, every day you put in 15K, after 10 days, you have 150K, you have a 6-digit exposure already. Imagine you're an institution, you want to put in $1 million. Wow, one day, 15K, to do $1 million, you need what, 60 trading days. To put $1 million, you need 60 trading days. And every day you must buy out everything. So can you imagine without moving the share price? And then when you want to liquidate, it's already. So, and institutions typically allocate more than 1 million to a stock. So I can tell you, I mean, this kind of stock, the liquidity wise, you go and check it out. Every day, volume 70,000 shares, 4,000. I mean, this kind of liquidity, hence the inefficiency.
Yeah.
And you talk about corporate governance, I think we've seen from their dividend history, I don't think corporate governance is a big issue. And it's just simply because it hasn't reflected. I mean, post-COVID, right? Because you see from COVID, it came off from $4.60 all the way down to $2.70, right? But you think about it now, now we are also at $2.70, compared to March 2020, we are now in a much, much better place already. Yeah. And the other bonus that I didn't talk about, that few people know. You look at this thing called deferred tax asset. Because of COVID, the hotels made a lot of losses in the past 2 years. Hence the share price drop, right? I mean, if you see, let me show you. This is to justify. Basically, why I'm explaining all this is to justify when people say there's no free lunch, you say until so good, but then how can the share price never reflect? I'll tell you why. When somebody looks at the financial statement of Keck, okay, year 2020, loss 562 million. Dividend, 0. Okay, for full year 2020, 2021, loss 194 million. Full year dividend, 4 cents. Okay, they look at loss. Then they look at half year 2022, also no profit. Then why people want to buy? Like Hong Kong, right? People say you want to find double 10% dividend yield or net cash, all that very easy, very easy to find. Then 10% dividend yield, people easily find. Then this one, 4 cents only in FY 2021, some more is lost. 4 cents out of 270 is what, 1.5%? Why people want the stock? People don't want the stock. If you look at metrics in the last 2 years, people look at dividend yield, and then people hear Keck Seng, people also scared. Why? Keck Seng Malaysia not very good. Why Keck Seng Malaysia not very good? Reason being, Keck Seng Malaysia, they only hold 30+%. So if you look at Keck Seng Malaysia's history, right, in the past 20 years, they have been buying from the open market every year. Every single year, they have been increasing their stake. So imagine, you own a listed company. You only own 30% of it, and you have money to buy every year. You want the share price to be high or low? You want it to be low, so that you can keep buying and buying and buying until you have a much more significant stake than 30+%. Now, Keck Seng Investment is different. Keck Seng Investment, why they are so friendly? They own 75%. If you own 75%, Hong Kong exchange requirement, you cannot exceed you cannot be lower than 25% free float. If not, then you have to do something. If not, then suspension, or you have to get out of Hong Kong exchange. So, Keck Seng Investment already 75% owned by the majority shareholder. Can they do share buyback? Cannot. Can they do market purchase? Cannot. Can institution come in and buy 10% or more? Cannot, because institution come in buy 10% also not counted as free float anymore. So also die. So again, it's just a so-called a playground for retail investor only, mainly. I mean, not to say that no institution, sure got 1 or 2 very small institution, but again, it's just a small institution. And institution also got pressure by the people who put money in the institution. Like, hey, you invest in this kind of company, so underperforming. Last 2-3 year return, you look at the return, like, this kind of return, you still want to keep it in your fund, meh? Okay, and then what's the dividend yield? 1%. You better get out of this stock, man. So, which is what is happening. I mean, there was previously, if you Google Seeking Alpha, Horos Asset Management, Keck Seng, you will see that, okay, let me help. See, if you Google Keck Seng, Horos Asset, and then Seeking Alpha, I mean, maybe some of you might not be able to access. Okay, but basically, what it is in 2019, let me see. I think I also recently never subscribed already. So they have But you basically there was an article written by Horus Asset Management. It's a very small fund management company that invests in small caps. So they were promoting Keck very loudly when it was $5. They said it's super undervalued. They say fair value is $18. That was in 2019. Okay. Then fast forward to 2022. Okay, again you go and Google Horus Asset Management Q3 2022 newsletter. They newsletter to their people that subscribe to their fund. Then they said, previously we have always strived to invest in companies that we think, in our opinion, are undervalued and are good capital allocators. However, in the recent years, we have come to find a lot more of such companies in Hong Kong. And then we also think that because of interest rate rise, the holding cost is very important. So we do not wish to hold into stocks that have very low dividend yields. And they specifically said Keck. So we will start to divest such companies in favor of companies which have higher dividend yield. My question is, you sell because the dividend stopped, not because the company is not good. The dividend stopped because COVID hit hotel, then become losses, 500 million losses, 200 million losses. How to pay dividend? They already pay 4 cents, considered very good already. Actually, in my opinion, this kind of loss figure, with this number, they pay 4 cents dividend, I think 给面子 already. Also, you still want them to pay you 15 cents per share, man. That would be very funny, right? Pre-pandemic dividend. But for us, we don't care about what happened in the past, right? What has happened has happened. We only look at what is coming, what is going to happen in 2023. What is going to happen most likely is that pandemic is over. Most likely is that the Ho Chi Minh, the hotel, Sheraton Saigon will do very well, as shown in the room rates. Even the company themselves, the hotel themselves, they know that it's recovering. We all know, right? And then Macau also, and then the US hotels even. So, but those are bonus for me. So looking forward, I think, that explains why the share price is so depressed. And even though, again, some people come in and say, lowest is 180, now 270 already, up actually 50% from the low. You still ask me to buy. It's like crazy.
Price anchoring now.
Correct, huh?
We call it price anchoring. You either anchor it back to the high price or low price.
To the low. But back when it's 180, people don't know China reopen. People think China reopen 2024 or 2025. That's like another year of losses or terrible earnings. But then, now China reopening is a big deal, 50% up is very little already. Look at C-Trip, look at those Hai Di Lao and all that. Wow, they are up ranging between 50 to 300% even. So what I'm saying is the large caps have re-rated. The small caps still got opportunity. Even right now, even if it's 50% above the low. The low and now is because of the China reopening. It's not that, now if you tell me don't have China reopening, don't know yet. You give me 180, I also must think a bit longer. But now you tell me got China reopening 270, I don't need to think so much. I think it's a better deal. It's a better deal now than when it was 180. But 180 is still a big deal. It's a fantastic deal because unless you expect the pandemic to last forever. So I think by all reasonable grounds, I think,
Understood. Actually, just want to ask, just now you mentioned that, let's say if the institution buy more and exceed the 75%, right? Actually, what will happen? Is it like forced that they must tender to privatize the company?
No, the exchange will give a notice to the listed issuer, which is Keck itself, the management. And they say, can y'all do something to reduce the free float? If y'all don't do it by a certain day, then we have to delist you. So the company usually do placement to find some way to increase the free float. Usually placement.
What's the likelihood that they will get privatized? Do you see this as a scenario that will play out, let's say, anytime soon?
Okay, so I think it's if it's privatized, people always say, later this kind of company shall privatize on the cheap. I said, okay privatize on the cheap with this kind of asset value, even as of now, remember the equity is 2.89 billion. So 2890 divided by 340 million shares. Now NAV is 850 . I say the management shameless enough to offer you 50% discount to privatize is 420 . Okay. Above, compared to current share price 270 is still more than 50% gain. Well, if you give me a 5% yield and then sometime in future you give me a 50% gain, I can take it.
Okay.
I can take it.
Not
But
too bad.
notice that if they earn 40%, if they earn 40 cents per share every year, going forward, which is very sustainable, like I mentioned, just Macau and Vietnam only, then the NAV is going up, right? So, and anyway, if you offer 50% discount to NAV, most people won't take it one. So I think so they won't succeed also. So I think this thing is like whether if you give fair value, or maybe not fair, but maybe a bit discount, maybe $6, $7. In summary, I don't know. It's just a bonus. It's probably a far-fetched idea, but even a cheapskate offer, I think will give you 50% capital gain from now, current value. Yeah, that is my base case. I don't think they offer 350 people, everybody all throw at them. For sure, me, I won't.
Like you mentioned that this is one of your largest holding, right? Do you mind share with me like what's the percentage of your allocation and what's your view? A more general question is that what's your view when it comes to diversifications? Like, do you have like more than 5 or 10 stocks just for diversifications purpose?
Sure, no problem. So basically now I own. The significant ones some. Of course, you have always small stakes just so that you can keep track. The significant one, maybe I would say 10 stocks, which altogether contributes about maybe 75% of my investable assets. So I'm probably about 75% invested, of which 15% is Keck, 15. And then my next largest holding is only about 6 or 7%. So it's twice my next largest holding. But I'm 75% invested. So my top holding Keck is about 15-16%. My second holding, third holding is about maybe 7%, 6%. Then after that, 5% of overall investable assets. Put it that way.
And this company you have already hold for a couple of years, right? You mentioned.
No, I actually only
what? 2 years?
I start tracking. Let me see. I start buying from 250 all the way until 180, then back to 250. So it will be from here. So 2022 June thereabouts.
Yeah.
So I remember this time I was buying 250. I was like buying. Even China ever reopened, I still think it's a very good buy already. Yeah. Then after that it keep coming off until 180. Wow, even better. Then restart again. Open. Wow, still good. Even better. In fact, here even better. Yeah. So I got a bit more aggressive after China reopened, like early December, around $2.10, $2.20. So I got a lot, not a bit more aggressive. Initially, I was a bit. Then after that, buy until 5-6% already. Wow, come until here, reopen already, and then I buy until 15%.
I see. And you have met the management, right? Have you attended the AGM?
Okay. Keck, I never meet management, sorry.
Okay.
This one, I haven't meet management. And because when I buy in June, July, already past their AGM. The AGM season, I think around late May, I think, in Hong Kong. So this year I'll be attending. But why I don't need to meet management for this one? Because their assets are pretty transparent. And then you talk about integrity. Usually I meet management to gauge the integrity or to gauge short-term results. In this case, management themselves know only as much as I do. In not short-term, I mean, how you know your hotel tomorrow occupancy is how much? Right? You just based on whatever you see on the rate there. I mean, obviously they'll have a little bit more information than me, but not much more. So the room rates, occupancy rates and all that, I myself can gauge. As to the plans, whether they sell the Macau property, my base case is only 60 million contribution to profit. It's their service residency. It's not even them selling. If they start to sell each unit is 10-20 million, it's way more than the contribution to full year already. It's more than my base case. So again, those are bonuses. So just to summarize, the bonus is the US hotels showing a significant profit. The bonus is the Vietnam hotel showing a higher profit than pre-pandemic. And the bonus is Keck management starting to sell their Macau property. So all these bonuses are bonuses, so I don't need to ask management. Just based on the base case alone, scenario alone, which everything I can Google search and find out. Integrity is no problem. The shareholdings, I found out why they in Malaysia they are so unfriendly and in Hong Kong they are so friendly. So I basically a lot of things I meet management, Keck management, I'll struggle to ask things that are relevant to the thesis. As in, I'll probably ask about the bonuses, like when do you think you will sell the Macau property? When do you think you will pay more dividends or whatever? But I would nothing that affects the base case. The base case is my 5% yield and whatever. So that's also, I mean, just to add on, just to share, that is also in line with my investment philosophy. I always look at downside first rather than the upside. So my base case will take care of all the downside, make sure that at this price is very attractive, super hard to find kind of attractive, and there must be a reason why it's undervalued. Okay, if I cannot find the reason, I also don't want. You just tell me a stock 5 times PE, 10% dividend yield, buy. No, sorry. Why is it 5 times PE? Why is it 10% dividend yield? No free lunch one. Unless it's super illiquid, you struggle to put in 10, 20K, then maybe possible. But if not, if it's a large cap or a mid cap, 5 times PE, 10% yield, sure got some question, right? Sure got some catch behind it, right? So same. So for me, I always like to think about all these things. I like to think about the catch. What is the problem? Why is it undervalued? What is the history? The more ugly the recent history, the better, because the more ugly means the turnaround, the more pretty. Yeah. Right? So for hotels, again, last 2-3 years was so ugly. The numbers very ugly. Dividend cut here, cut there, cut. And then share buyback, no chance. People say, if the company is so cheap, why don't the company do share buyback?
Yeah, that's my question is actually.
Actually, but cannot. The owner already owns 75%. They want to do share buyback also cannot. Why the owner don't want to buy more? Cannot. They buy more, the exchange will force them to sell. Why then they want to delist? Maybe. But then hard to delist, I will argue, because it's so undervalued. You offer 100% premium, people still don't want. You offer 200-300%, you look like an idiot. Like, why you will pay so much? Really. Actually, I previously met, there was this management from Pan Hong, okay, this Singapore listed company. I met the management. At that time, the share was very depressed, 7-8 cents. Then I asked him, fair value 20 cents. Then I asked him, then why don't you privatize? He said, I offer 10 cents, you want to give me? I said, don't want. Then I said, I offer 20 cents, then I give you fair value, then who give me the benefit? Like, 你们那些好东西你们都拿去了，利润你们拿了，赚头你们拿了， then 我还要跟你 take private， 还要花这么多钱来 fair value， then 不用承担风险呢 also got risk嘛 later COVID come back how and all that. So you cannot expect, I mean, a lot of people always expect management to take back offer at fair value. Very difficult lah. Offer at fair value, then management eat what? Then sure, they are businessmen, or some of they are smarter businessmen than us. So for sure, you must give them some. So my investment philosophy sometimes is to buy severely undervalued and sell undervalued. Okay, you cannot hard to wait to fair value. Sometimes you wait to fair value, it give you many rounds of severely undervalued, fairly value, undervalued, severely undervalued, then you forever just hold on to it. But if it's from severely undervalued to undervalued, good enough, I sell. Like this thing can go to $6-7, still undervalued, but never mind, I sell already.
Yeah, actually, I have one more questions to ask you, because I think when you look at the business, the Macau business is still considered significant, right? As part of your analysis, do you analyze what is the, like the development plan of Macau, and then is there any competitions that coming from China and so on? Do you look at all those like more macro landscape to judge that, okay, Macau is the right choice?
Yes, actually. Yes, I look at hence, just now I showed you the master plan. That one is their master plan for the next 20 years. So, I mean, obviously, if you know Xi Jinping, China, right, they are gambling is a vice in China, right? But they will not ban Macau from operating casinos. If they ban Macau from operating casino, firstly, Macau people will riot, massive unemployment. Secondly, they are just diverting all the Chinese money to all the IRs in the region, like Vietnam, Korea, Singapore, even. So they will keep Macau there as a gaming hub, but they also want to develop it as a family-friendly tourist. They don't want Macau to be just a gaming place. They also improve the brand name lah. China, how can you have a gaming city? Like 每个人赌到倾家荡产啊. So they want a nice brand association. So Macau is a very special place whereby they have because it's their own regulated, own government, right? It's like 特区政府, right? Special government. So they can say, no capital gains tax. That's very different from China. China got land appreciation tax, got this tax, got that tax. Macau is very good. No capital appreciation tax, everything freehold. You come in only, the tax rate is also very low only. I think 12% or something. Yeah. So overall, the development plan for Macau and also the Greater Bay Area, like, between the Macau, Hengqin, Zhuhai, Hong Kong and all that, Guangzhou. So it's actually making Macau a very attractive place. And if you compare Macau GDP and you compare the growth prospects versus Monaco, which is another one of the richest cities in the world, I foresee Macau being like Monaco, but Monaco is now, I think, 4-5 times, in terms of PSF, the residential price is about 4-5 times that of Macau. for Monaco. So I see it's very good potential. And in the next foreseeable future, I think Asians are getting richer. The region is getting better. Like Vietnamese people getting richer. You talk about all the, India and all that. So it will favor this region rather than, US and Europe. So in the overall macro sense, I think Macau is pretty positive. I'm pretty positive on Macau and Vietnam. If you ask me, I super love these two places. If countries were listed as a stock, then I would want to buy Macau. What's their risk? Their risk is unless they got no tourists. But then you look at it, China tourists is like domestic tourism, So it's like domestic, same country, people go there and gamble, your market really so big. I would love Macau much more than Las Vegas. Now all they need to do is just to make themselves more family friendly so that people can go there for, diversify more things. And then if Hengqin and Hong Kong and Zhuhai develops well, then it's all good for them.
Yeah. Actually, the properties, the private properties in Macau, right? Is it like open for foreigners to buy? Is it like really private one, or is there any restriction?
No, so I can go there and view. So only got ABSD lah. They really got ABSD also lah. Additional buyer stamp duty, literally. Yeah. So instead of the 3% stamp duty, if I'm foreigner, I need to pay another 10%. So that's it. That's it. Everything else is the same as their locals. So I can buy as many as I want. I think also the ABSD might change.
Yeah, got any plan? Retirement home?
No, if I want to buy a Macau home, I must buy Keck, correct?
No, as in different. One is for investment. The other one is really buy a retirement homes and then go there and really like retire.
Still not at retirement age yet. Anyway, they haven't completed the family friendly facilities. So now with 2 young kids still cannot get. Yeah.
Okay, I see. Okay. I got no more questions on Keck Seng. And hope that whoever tune in to listen to this interview or podcast will enjoy this session. I definitely learned a lot on Keck Seng. Actually, I heard your thesis, the follow up, but didn't hear the first part, right? So it's a bit hard for me to gauge last time when I joined into your call. And I just want to for those who are watching, right, because we didn't talk a lot about like generic stuff, and we didn't talk about Ivan's background. It's also because there's one more the FIRL podcast that have a very lengthy interview with Ivan, and then there's a lot of interesting stories there. So I'll put that link in the descriptions for those who are interested to find out about yourself. So I think that's a very, very good source. I really enjoyed that podcast a lot now. So I just want to share it here. So with that said, I thank you so much for coming here and then share all your knowledge on this. Hope that audience will enjoy, and then hope that we will have another session like this.
Sure. Thanks, Moody.
Thank you.